Good evening, everyone. Hope you're well. Hope you're doing all right. Guys, I'm in Kuwait today, and therefore I'm using my phone in order to film today's lesson. Now, today I want to reveal to you the market circumstances, the set of conditions that usually present me with the best trading setups. It's a counter trend trade that usually comes with a high risk to reward ratio, 1 to 3, 1 to 4 risk to reward ratio, and usually a high win rate. So let's get right into it. What are these circumstances and these conditions that usually present me with those high risk to reward ratio profitable setups? Now, before we get into it, I just want to quickly state a disclaimer here. There's a lot of usernames on social media that resemble my username. For example, Discord users, Instagram users, whatever social media it is. And they keep messaging you guys about services that they offer. Now, guys, those are not me. The only way to attend my lectures is through the link in the description. That's it. I don't have time to DM anyone. I will never DM you first. And therefore, just beware of scammers. All right? Now, let's get right into the video. Assume there's an asset. Okay, whatever asset. Let's say Bitcoin. There's people that believe that Bitcoin needs to be bullish, and then there's people that believe that Bitcoin needs to be bearish. The market, what's happening on the charts, is simply the result of that battle between these two. If there's more people that believe that Bitcoin needs to be bullish than people who believe that Bitcoin needs to be bearish, then that market goes up. If the opposite happens, then that market goes down. Now, the best trading opportunities, and this is the setup that I want to reveal today, happen when both of these people are doing the same exact action, which is either selling or buying. I want to give you a very specific example, and I want to show you a live trade about it, so it's not all theoretical and it's not all just me speaking to you. I recorded myself trading, and I want to show you the exact trade that I took. And therefore, let's get right into it. Now, assume that today we receive very positive news about Bitcoin. Now, the people that believe that Bitcoin needs to be bullish will go ahead and buy Bitcoin at mass. They will pour a lot of money into it. As a result, Bitcoin will expand through to the upside. Okay, it will push through to the upside. Now, as Bitcoin expands through to the upside, the people that believe Bitcoin needs to be bullish, the buyers, are now incentivized to sell because they want to take profits. They want to take some profits off the table. So the people that believe that Bitcoin needs to be bullish, the buyers, are right now taking profits. They are selling even though they believe that this instrument is a bullish instrument. Now assume that at the same time as that market expands through to the upside, and let's say it gets to that point right here, bearish news is received about Bitcoin, bearish news about that instrument. Now the people that believe that Bitcoin needs to be bearish go ahead and start selling Bitcoin at mass because they already believe it needs to be bearish, and right now we just received bearish news about Bitcoin, so they would be selling Bitcoin at mass. So the people that believe that Bitcoin needs to be bullish are selling because they want to take profits, and the people that believe Bitcoin needs to be bearish are selling because there's massive negative news about Bitcoin, and therefore you can see that there's a lot of selling pressure that is happening on Bitcoin. As a result of that, Bitcoin will melt aggressively through to the downside. This will give you a 1 to 3, 1 to 4 risk to reward ratio trade. So again, the set of circumstances is the following. Number one, we receive positive news about the asset. Number two, as a result of these positive news, that asset expands through to the upside in a significant portion to allow these buyers to start thinking about selling and taking profits. Number two, step number three, forgot what step I am. Sellers enter this market as negative news is delivered about this asset. As a result of that, the people that believe that Bitcoin needs to be bullish or the asset needs to be bullish are selling to take profits. And at the same time, the people that believe that this asset needs to be bearish are right now selling massively as a result of the negative news that was delivered about that instrument. As a result of this enhanced or exaggerated selling pressure, that instrument or that asset sells off aggressively and gives us good enough high risk to reward ratio trades. Let me show you an example of a trade I took on AUDCHF. Good morning, everyone. Hope you're well. Hope you're doing all right, because I'm buying AUDCHF right now through to the upside for the following reasons. Now, I've previously mentioned on X that the Australian dollar is one of my favorite instruments to buy right now. I am very bullish on the Australian dollar. We can see from a technical perspective that AUDCHF has been expanding through to the downside for a while right now. We then now received bullish news for the Australian dollar. Their unemployment rate shifted down by 0.2%, and therefore the market started pushing up, and I'm joining it through to the upside. We can see that as the market has been pushing down, it created all of these different highs linked by this trend line right here. 1, 2, 3, 4, 5, 6, and therefore lots of stop losses above these highs, which is another positive signal for AUDCHF, hence why I'm buying it. We can see right here that as the market melted down, it grabbed all of these different stop losses below these bottoms right there before the shift. And right here on a more micro perspective, we can see that AUDCHF created 1, 2 bottoms right here, liquidated through to the downside, and then a shift through to the upside. We can see on the TET Capital report from an algorithmic perspective, AUDCHF is bullish on the investor horizon, bullish on the swing horizon, and bearish on the day trading horizon. However, the day trading horizon target is 0.51687, which is this low right here, which in my opinion is already targeted, and therefore that's why in my opinion this bearishness right here has already ended, and right now we're going to shift bullish in the direction of the investor and swing horizon. Let's see how that trade goes. So this is exactly what happened with the Australian dollar. Let's apply the theoretical concept that I told you guys in the beginning of this video on this trade here. So first, we received negative news about the Australian dollar. Now, what is the negative news? The unemployment rate, that is the main one, the unemployment rate climbed up to 4.5%. Now, to give you guys context, 4.5% is the highest unemployment rate seen for Australia since November of 2021. And therefore, that was huge bearish news for the Australian dollar. As a result of that, the people that believe that the Australian dollar needs to be bearish went ahead and poured a lot of money into sells on the Australian dollar. As a result of that, AUDCHF expanded through to the downside. Now, at some point, as AUDCHF is expanding through to the downside, those sellers are now incentivized to buy again, which is taking profits, in order to book some profits out of their sell positions. So those sellers, the people that believe that the Australian dollar needs to be bearish, are now buying in order to take profits. Now, on top of this, we receive positive news about the Australian dollar. What is the positive news? The unemployment rate, which was the main driver of the bearishness for the Australian dollar, went down by 0.2%. So it got better by 0.2%. So now, the people that believe that the Australian dollar needs to be bullish are pouring a lot of money into buys for the Australian dollar as a result of these positive news being announced. So the sellers are taking profits and the buyers are jumping into the markets as a result of these positive news for the Australian dollar. So that creates a lot of aggressive buying pressure for the Australian dollar. And as a result, that caused AUDCHF to push up tremendously in my direction, booking me my 1-to-3 risk to reward ratio. Now, I want to add a confluence to that setup, which is something that we've seen in the video that I just showed you for the live trade, which is as AUDCHF was going down before my buy position happened, we created a trend line through to the downside. We created some tops, some trend lines through to the downside as the market was going down. This signals that there's a lot of stop losses through to the upside above this trend line. This is an additional positive confluence that there's a somewhat significant probability that the market is going to go through to the upside and take out these stop losses. So you have the macroeconomic perspective that we just spoke about, and then you have the technical perspective, which is there's stop losses to the upside that increase the probability of the market pushing up and taking out these highs. On top of this, what increases this probability even further is the fact that, if you guys remember, when I zoomed on the chart, I showed you that the lows as well, there was bottoms, and they were taken. So the stop losses of these lows were triggered through to the downside. This also increases probability in our favor that the market is going to react from this high liquidity level through to the upside into the next high liquidity level, which is the trend line stop losses. So as you can see, three things basically increase in probability that the market is going to push up, and this causes an aggressive impulse in our direction, which booked us our 1 to 3 risk to reward ratio trade in that case. So that's it. Those are the set of circumstances. To summarize, number one, positive news about an instrument, expansion, negative news about the instrument, sell, aggressive sell through to the downside. Now, if we flip it, negative news about the instrument, expansion, positive news about the instrument, aggressive buy. And as I said, the reason why those aggressive impulses happen is because the sellers, in that case, are taking profits, and the buyers are entering the market as a result of these positive news, creates aggressive buy-in pressure, impulsive market through to the upside. As simple as that. I hope you guys enjoyed that video, and I'll talk to you in the next revelation, possibly tomorrow. I'll talk to you guys soon. Let me know in the comments if you guys like that video. I'll speak to you guys soon.